Good morning and welcome to Stock Market Today for Monday, April 29th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. You can sign up for a free email to follow along with the show. Get daily stock ideas for you to consider in your inbox every market day before the market opens. Hope everybody had a great weekend. Let's dive right in. U.S. equities were higher in Friday's trading with the S&P 500 and Nasdaq reaching new closing highs. Treasuries were stronger with a bit of curve steepening. The dollar was down on the euro and sterling crosses, but little changed against the yen. Gold finished up 70 basis points and oil was weaker. WTI settled down 2.9%. Erasing gains from earlier in the week. At the sector level, outperformers were healthcare, financials, consumer discretionary, and consumer staples. Underperformers, energy, tech, and utilities. Tech broadly on the back of that print from Intel. S&P futures, as we get to the desk this morning, are a little changed to start the week, slightly lower. Asian equities were mixed overnight. China extended its recent underperformance, while Japan is closed for the Golden Week holiday. European markets are moving lower as well. Treasuries are mostly weaker. Dollar is stronger versus the yen, but a bit weaker against the euro. Gold down 40 basis points. WTI crude off another 70 basis points as we start the new week. So diving into the S&P 500, you can see here we are knocking on the door of all-time highs. Now, we did close on a closing basis, new highs for the S&P 500 and the Nasdaq. Have not taken out the intraday highs, however, at around 29.40 and change for the S&P 500. Support 28.90 to 29.10 in the near term, then near 28.50 as a stronger level of support. Resistance, call it 29.40 there, near the all-time highs. RSI hits overbought levels, so what are we looking for? Same as what we've been looking for all throughout this uptrend is, should we stall out here and begin to pull back, we want to look for the RSI to hold within bullish ranges, kind of hold above this 40 to 50 level to give us an indication that momentum remains with the trend. We are currently overbought. Wouldn't be surprised to see a bit of a pause here in the near term. However, Chaikin money flow is still bullish. So the indicators line up. From a trend perspective, we're looking for RSI to hold within bullish ranges, although we do acknowledge that the RSI has reached an overbought level at 72.28. Now, your market in a minute. It's Monday. What are we talking about in our note to Chaikin Analytics clients today? We do just kind of a broad view of the market. So S&P 500 and Nasdaq reach new closing highs. We hit on that. 10-year yield retreats from resistance at the 2.6 level. We'll take a look at that. It's been something we've been talking about for a while. Dollar breaks out of the trading range, and that put pressure on the commodity complex. And as I said, mixed to slightly lower open based on the futures here today. Now, the power bars for the major indices mostly strengthened on the week. As we enter the new trading week here on Monday morning, the Dow stands at 9-2, bulls to bears. S&P 500, 144 bulls, 58 bears, added 47 basis points on Friday. Nasdaq was an underperformer, largely due to Intel. 21 bulls, 11 bears in that group, and something that we're going to be keeping an eye on going forward now is the relative strength of semiconductor. Small caps had a nice day of outperformance. 567 bulls, 269 bears. Bonds uptick, sending yields lower. Healthcare continued to follow through to the upside after bouncing from deeply oversold conditions. 12 bullish or very bullish stocks in the healthcare sector, 9 bearish or very bearish stocks. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. Now, our stock of the day today, speaking of healthcare, is Tivity Health, medical care stock. Closed at $21.99, up 3.14% on Friday. Ticker symbol is TVTY. And Tivity has a very bullish Chaikin Power Gauge rating due to very attractive financial metrics, very strong earnings performance, very strong price volume activity, and positive expert activity. So the 20 factors, 5 in each of these 4 categories, come out with a very bullish rating for Tivity Health. Strong trend, but a weak industry group. Medical care names have been under pressure. Obviously, we've been talking about that for quite some time. We can see a steady downtrend here, trying to reverse the tide, but I do think it's too early to get involved here in Tivity Health. Remember, these stocks are auto-generated for this show based on our algorithm and based on the Chaikin power gauge. But from there, we do the analysis. And what do we look for? We look for the market and model to be in agreement. We look for the dynamic duo to be in gear, and they are not at this time. New rating, just turning to that very bullish rating. But the stock continues to underperform the market. Now, the intensity of that underperformance has been lessening, dampening of late, but it's still underperforming. So we, despite the very bullish rating, we want the market and model to be in agreement. They are not. Taking a look at the overbought, oversold indicator, it is encouraging as it's rounding higher before becoming oversold. Chaikin money flow is bullish. Stock has regained the long-term trend line, but that long-term trend line is still declining. So we're going to kind of hold off on this one. We'll add it to a bullish watch list. We'll see if the relative performance begins to improve. But right now, not going to get involved on the long side of Tivity, TVTY. We'll add it to a bullish watch list, though, and keep an eye on it, see if that picture changes. Sector tracker, looking at the movement of the major sectors over the last 5 days. Healthcare, as we said, bounced from that deeply oversold condition, up 3.63% over the past 5 days. Communication stocks had a good day on Friday. Look at Facebook moving higher. Look at Disney on the back of their new Avengers movie, breaking box office records for opening weekend. Disney should continue to do well. Utilities were under pressure, have stabilized on an absolute basis, and are bouncing from support, but we will note that the relative trend in utilities has turned lower. Financials moving higher on the backs of still solid earnings. Real estate, that counter trend pullback looks to have run its course as well, bouncing from resistance, but again, the relative trend there diminishing. Discretionary tech and staples round out the group of names that are sectors rather that have been positive over the last 5 days. On the loser side over the past 5 days, energy starting to retreat as oil has hit its head on resistance. We'll look in a little bit at what the rising dollar means for commodity prices, materials, again, impacted by lower commodity prices, and industrials giving some back after bouncing over the past couple of weeks. Now, our industry in focus today, pharmaceutical services, over the past 6 months has underperformed the S&P 500 by about 17.5%. And its power bar ratio, which measures future potential, is very weak. 17 bearish or very bearish stocks, only one bullish or very bullish stocks. It's currently ranked number 21 of the 21 subsectors that we track. Some of the indicative names within that group, all with very bearish Chaikin power gauge ratings, are ARI Pharmaceuticals, AERI, Therapeutics MD, TXMD, and Reata Pharmaceuticals, RETA. Now, what I will say is all of these stocks are at or near oversold conditions. So types of names we know we don't want to own, but not quite there yet for bearish positioning. But I do want to take a look at Reata today. Very bearish stock, weak trend, weak industry group. Closed at 79.13 on Friday, up 97 basis points. But the reason we're singling this one out is a couple of reasons, actually. First, technically, we can see here a potential double top in play, resistance at the $100 level. At best, I think we can see a consolidation here. But what's interesting to me is that this group is going through what we like to call a personality change. And it's a personality change, not this group rather, but the stock. Personality changes to the bearish side. What does that mean? It means power gauge rating turns to bearish or very bearish, and then the stock begins to underperform the market. Chaikin money flow goes from bullish to bearish. Now, as I said, the stock is oversold, so I don't think it's a compelling entry on the bearish side here right now. But I do think we want to monitor the stock as it's gone below the long-term trend line, has some resistance in the $90 to $100 range. So I think at best this stock is range bound, type of name we don't want to own. We want to monitor the overbought, oversold indicator, and as it moves back towards an overbought reading, then the stage is set to open a position to the bearish side. You can use your options to gain that bearish exposure. Look at put options, look at bearish vertical put spreads, however you choose to express that view. The time is not right now, but we want to add RETA to a bearish watch list and start to look for potential entry points. Now, our trending names, yesterday's S&P 500 or Friday's S&P 500 gainers and losers. A lot of this is earnings related. Ford up to over 10% on earnings. Align earnings report sent that stock higher by 7%. Cap One, COF, very bullish stock, up 6.5% following their earnings announcement. VeriSign, 5.5% plus on earnings, and IPG earnings sent that stock higher by 5.25%. Loser side of the board, Intel really weighed on tech and weighed on the semiconductors, down nearly 9% following their earnings announcement and their guidance. Target under pressure, not earnings related, but Amazon announced that they are going to make one-day shipping standard for Prime customers. That weighed on Target. Nvidia down in sympathy with Intel, 4.77%. HP, Helmerich and Payne, oil services stock down 4.4% as oil has come under pressure. Same with EOG, down a little bit over 4% as oil has come under pressure. Now looking at our earnings update, AMD missed by 16 cents. I'm sorry, ADM, not AMD, ADM, Archer Daniels. Exxon missed by 17 cents, stock under pressure, really weighed on the energy group. Franklin Resources beats by 8 cents. Chevron, neutral stock, beat by 13 cents. And Ventas, very bearish stock, beat by 3 cents. Earnings, really another busy week of earnings. Over 150 names in the S&P 500 scheduled to report earnings this week. After the close today, all eyes will be on Google. GOOGL, bullish stock, reports after the close today. Remember, we looked at that chart on Friday of the FANG group that we look at. Look for, see if Google can continue the trend of bullishness for those stocks. Neutral names after the close to keep an eye on, MGM and Western Digital. And then after the close, bearish LEG will report. Chaikin suggests caution when holding bearish stocks ahead of earnings. So let's get into it. Charts that caught our attention here for our note this morning. Here's the 10-year yield. You know it. We've looked at it. Resistance at 2.6%. We hit that level coinciding with a declining 50-day moving average, sent the 10-year yield lower. Rebuffed at resistance, opens the door for a retest of support down around the 2.37, 2.4% area. The yield is below the 50-day moving average, which is declining, below the 200-day moving average, which is declining. The trend for yields remains down. Now, the support area at 3.37, 2.37 to 2.4% is fairly solid. I would expect that to hold here in the near term, but the reason we think it's going to be tested, number one, is the trend perspective, and number two is that trend is being confirmed by momentum. The downtrend is confirmed by momentum. Here's the RSI, unable to become overbought, and now after becoming oversold, remaining in bearish ranges. Notice that during rallies, the RSI fails to get much above the 50-60% level. So the same way we were looking at RSI for the S&P 500, the flip side, right? It couldn't become oversold, really never got below 40 or 50 on any of the pullbacks. The same concept applies here in reverse to confirm the downtrend in yields. As yields trend lower, look for continued absolute strength in your bond proxies, and also watch the financials as they could come under some pressure if yields really do break to the downside. Dollar breaks up and out of the range. Here's the US dollar index kind of hitting its head on that 97.5 level, finally broke out last week, and that move was confirmed by trend above the 50-day moving average, above the rising 200-day moving average. And notice here, during pullbacks in the consolidation, RSI unable to become overbought, now moving towards bullish ranges. Continued strength in the dollar, should it play out, would be a negative for the commodity complex. Think about your energy stocks. Think about your material stocks. If you're looking at opportunities in those groups, you might want to temper your expectations given further strength in the US dollar should this emerging trend gain legs and continue to the upside. Right now, signs point to that trend continuing. And here's commodities. They break lower with that breakout in the dollar. Commodities hit their head on the declining 200-day moving average and faded. Now they're finding some support at the rising 50-day moving average, but we do have a series of lower highs for the RSI. So to the extent that the dollar remains strong, we would expect commodities to remain weak. That's going to wrap it up for today. Head over to ChaikinAnalytics.com/today. Sign up for that free email. Follow along with this show. Get daily stock ideas in your inbox before the market open. I will see you back here tomorrow. Have a great Monday, everyone.